I think you got to have some type of method in trading. You could go into the day and just wait to see what applies, but then you'll be chasing things. For me, I have 3 setups I'm looking for, and it's easier for me to just wait for those setups, plan out my trade. I know what they're going to look like when they're setting up, so I can prepare and I can buy at the best time.
Welcome back everyone. Today I'm sitting down with John Kurisko. We connected a while back. John is a very inspiring trader who is trading on a daily basis, really someone who's putting in a lot of work. And we'll talk about, of course, your lifestyle in trading, how to get from a beginner level to where you're able to live from trading and live your dream lifestyle and make money, of course, at the same time. So how's it going, John? Welcome back.
Oh, thank you, Etienne. It's good to be back. And we were just talking before how passionate I am about trading, and I see that in you. And I was very excited when you reached out to me and to get back to talk about it, because I was following your channel and how you're teaching people your way of getting out there and being free, being a trader and doing things and living your dreams, which you're doing. And that's what I love to do myself, is teach that, because I've been through the markets for 25 years now. And I was just telling you in the beginning, you could do a lot of things right and not even know you're doing them right. And then, at this point, I am excited about teaching people coming in because I know the path. I absolutely know the path. I could say that without a doubt, with confidence. I know how to make money in the market. Our worst enemies are ourselves. We will prevent ourselves. We'll blow up. We won't believe it. We don't have confidence in our setups. If you're passionate enough on something, especially in trading and stuff, and you realize, hey, you have an edge on doing certain, the markets are like a casino. Once you're in there and you see the lure of the money, you're going to be in there and you're always going to be trying to make money, but not every game is going to give you the good payoff. And you have to wait. And there's so many analogies out there, and you probably, you got to adapt that analogy that works for you. If you're passionate about something, you're typically great at it. If you're not passionate about trading, you can't do, half in, half out. There's something about experience that comes with trading. I think it's mostly mental now. And I've been teaching that a lot, the mental part of it, because I have the strategy and methodology of picking out great spots in the market and trade and give you a higher probability percentage trades and stuff. That's all good. But unless you're able to have the confidence and discipline to wait for them and not trade around them.
Well, one thing I want to ask you for sure, though, is regarding the path. Because a lot of people I talk to, a lot of traders who I talk to, they learn every day, they put in the work every day, but they really don't have any clue like how to get better, like the path to become successful in trading. So can you share a bit more about how that will work and kind of like the process for that?
It comes back to analogies, I think, something that you can relate to, especially a newer trader knows how to be good at something, and they got to apply that. Trading's like is open for everyone. But if it was easy to make money in trading, everyone would be doing it, and it would be. But that's not the truth. It's very hard to make money in trading. It's set up against people and our emotions, our discipline, our patience, and not having a good foundation. It's going into a casino, and you feel that you urge to trade, and you're taking you have some edges there and stuff, but you don't have the ultimate edge. You don't have the patience, you don't have the discipline, you don't have the time in the market to know certain things. So that it takes time to be successful. I could tell you so many stories. And back in the 90s, I got lucky, started trading in 96, and then 97 was around. It was kind of a learning. And my first year, I blew up my account. I started like with $12,000, and I blew it up, and I went back to work for another year. And then I quit my job again, and I traded again. And I just happened to catch the bull, the 98, 99. So I took that money and I quadrupled it, and I made more money than I've ever made in my life. And it was easy. It wasn't really anything. You had to have guts, but at that point, being so young and a new trader, you're going to be more cavalier in your trades. You're going to be more, but that's not the ticket to make money. You have to be extremely disciplined. And the key is here. This is what does it take to become a great trader? It takes discipline. It takes so much discipline not to get into the market. Most traders, fail because they overtrade. All right. They're not waiting for their setup. They're not waiting they're trying to make something happen. They maybe revenge trade. They trade out of boredom. The hardest thing in the world is to understand that this is a business. And there's a certain way the business could perform the best at, and you have to outline that. And I do it from, people that I trade with in our community of traders, and I call it the business plan. And it has to be step by step. Like if someone's coming into my business, I'm going to teach them straight from point A to point B, point C. Stay on that business plan. If you stay on that business plan, you're going to make money. If you stray from it, you're probably going to get caught, and then your revenge trading is going to be a downward spiral. It's like someone falling off the wagon. So many people have taken on in the beginning. I would try to teach them, and before I had my show and stuff, and friends and people, oh, I want to get into trading. I hear so much about this. All right, yeah, come by the office. You can trade. This is what you got to do. Sit with me. Sit with me. Sit with me. Sit with me. I'm watching them like a hawk. Don't do anything. Don't do anything. Everything's great. Everything's great. For the next 10 days, I don't see them. Oh man, I blew up my account. I was trading every day, and everyone did the same thing. They all blew up their accounts because they just wanted to trade and they felt it was easy to make money. The market gives you great opportunities, but you have to be there in front of them, and you got to be willing to take them. It's not hard to find a good trade. Like you could probably look back and with your forex and say, I'm always looking for this setup. I'm going to take this setup all the time. Right? Is there a setup that you look for with your Bollinger Bands and whatever, the perfect setup?
Yeah, of course. Yeah, pretty much always the same. Yeah.
Yeah, right. We all have that perfect pitch. That perfect pitch we're waiting for, that we're trained to do. But you have to be in there in front of it, and you have to be prepared, and you have to be disciplined to take it. So many times we're not mentally in the right to say, "Oh, I see a divergence there," and I feel like I missed a tick or I didn't get it right and then I hesitate a little bit more, and then I miss it, and then I chase it, and then I'm chasing it. Something. Why did I just do that? I we all run into that problem, and that's our worst enemy. We're going to be our worst enemy. It's going to be very hard. It's a hard journey. It's a hard journey, but as you get older and you start realizing, hey, there is a way to this. You got to write it down and do whatever it takes that helps you, whatever personality type. For me, I'm very disorganized, so I have to write everything down. So what I did, for me and members and stuff, I made the business plan and I have step by step. Well, how to determine the divergence. Where do you put your stop? Where do you put your first target? And everything is from that point on is automatic, but no one pays attention to it. Everyone wants to learn on their own. And they said, I said, well, you need to go and do your thing because I'm going to tell you something. You're going to try to reinvent the wheel, and you're going to come back and say, oh, I blew up my account and I want to do it again. I want to pay attention to you. And I said, all right, well, that happens to everyone. You got to let them blow up.
The trading is a sexy part of it. Like the placing trade is a sexy part, but then there's a lot more behind that people don't think about or don't really want to focus on because it's kind of like the boring work. To me, I like it. To me, it's fun to make a plan. It's fun to work on things, fun to improve the process. But for a lot of people, it's not the fun part.
Yeah, it's following that chart for me too. I was like, I like to every day. I like to go back and back test the whole day, and then rerun the day minute by minute, just like that, just minute by minute, and marking the trades that I might have missed or why I missed them and stuff. And normally I'm on top of them, but I might not take them all, but I'll identify them all. And I'll say, why didn't I take that one? I think everyone's problem is at one point discipline and taking things like that, a good setup. I've left so much on the table without stepping up to the plate.
That's a good practice, though. I've never heard anyone do that, to be able to go back and backtest the whole thing. I think that's really good practice.
Oh, it is. I like you said, if you like doing it, and I like charts, I like identifying levels, and I've been doing this for such a long time and remember, I'm in front of the market doing the show, if I could say, day trading radio. I'm doing the show every day from 8 o'clock in the morning to close. So for every minute, I am analyzing the market. I'm like, at one point, the Rain Man of these charts. I've seen them. I've seen every combination. So now all of a sudden, I'm able to just, hey, all right, watch for the divergence going to set up, and it's easy enough for me to tell that. It's harder for me to reach the keyboard and say you need to take this trade. But maybe there's only 2 trades. Maybe there's 2 setups a day, and that's the other hard part. Sitting in front of your computer for 8 hours if you're a full, or 6 hours for a full-time trader. It's hard, to say, all right, nothing's happening. Oh, market sold off. It's getting choppy. I'm going to get in. You're going to get chopped up eventually. The path is there. if you have a good path and you know it, but we're going to go off that path almost all the time just because of boredom, something, something's going to drive it. Cause this is, I think, just like the casino, play enough, the house is going to win.
I want to hear you talk about the market and like how you spot the differences. So we had for pretty much like since COVID started, we had like this like drop, then the market went back, then we got the war now. Do you see anything changing the market and how it's like affecting your trading?
It was a difficult time when, because you always think you go through these black swan events, and I've said, oh, that's not going to happen. Ebola is not going to happen anymore. The virus is gone. 9/11 is gone. You never think you're going to be on the brink of World War III, and how that might affect the market. And you don't want to say that's impossible. That's not going to happen. Not in this day and age where everything you expect is not happening is happening. It's like the weirdest. We live in the weirdest times. It's like we're seeing things that are happening. That it's like this is the most historic time. There's a saying that we always use over here. It's like, where else are you going to put your money? Like, where else can you put your money in the in the world, gain to make money? Everyone wants to make money. That's the object. I think eventually you stay in good stocks. You keep your retirement in the market. You're going to have these pullbacks, but eventually you're going to go higher over time. But I can't, from this point on, I thought we'd go a little bit lower, and I'm at a point right now. If I could show you charts, I'd show you some charts right now. So this is the S&P 500 right here, and you know we just had one of the greatest rallies in a while. I mean, this is where the high was. We came down to about 15, almost 15% down on the S&P, and we bounced. And what was really big about these last 4 days? And there's a Ryan Dietrich. He's a market statistician in the markets, and he talked about these last 1% days where the market ran up 4 days in a row over 1%. It's only been done four or five times in history, and the percentage of or what the gain was after this for the year was 100% over 20%. So from this point on, every time we had this type of move, 12 months from now, we were up 20% off of that level, which is kind of an interesting. But you can see we have this retracement here, and it was a really good one. We went back to September where we hit our highs and we pulled back, and then we made some highs here, and then we got hit with the tech interest rate scared, and we got hit with Russia. Now we have all these things going on with Russia, oil, everything, but the market rallied really hard. And at this point, I'm saying I want to take a short into this trend line. I want to take a short into this, and that's about 45, 42. And when I say that, watch for a change of trend, maybe a couple of down days where we have another important rule of the trade is trade the direction of the market. It's much easier to make money going long in a very bullish market, and it's much easier to go short and make money going short in a down market. And just remember that's half the battle is done right there when you take your trades. And I want to show you another real key thing that I this is number one rule that I use, and it would keep people out of the trouble. But yeah, at this point, I'm surprised we got back this far. Do we eventually go through this 4,600, 4,700? Yeah, I'm not denying it. I was watching this level to be, to see how we would react off of this.
So this is very interesting. You mentioned the fact that usually when the market does these like 4 big winning days, for 1% days, that usually ends up being more gains in the future, right? It ends up being 20% up in the future. So in that case, a lot of people would be scared to go short. They would want to just wait and be long, or just like put money in the S&P and wait for price to get in their favor or something. What makes you want to go short? Is it your style? You go against the market, or just a bounce trade, basically?
It's a good question. I mean, there's so many moving parts right now. They were talking about the unwinding of the balance sheet and cutting the stimulus off, and now we're already starting to get the rate hikes. But there's other parts of that that are going to play out. They said they're going to affect stocks, and that's not my expertise. The whole underlying economics of the interest rates and how they're going to affect stocks. Because I'm pretty much a divergence trader, which is usually a momentum type of base trade where I'm trading for 5 to 7 days. For anybody holding for a longer term time frame, I mean, it's just been proven that the market goes back up. It's just trying to time it properly. I was looking here at this point right here. I was looking at a level down here and we turned around. We never got, I said, maybe we'll capitulate and we'll get down to this 15% correction area. There's a big rise in trend line, and we didn't. We actually just ripped higher. So, we didn't get down to an area where I was liking. It took off. Now we're getting to a place where I'd watch. It might blow right through this. This market is a absolute, schizophrenic market.
So you mentioned your number one trading rule to keep you out of bad trades. I want to hear about that.
Yeah. This is and again, well, let's jump over to the what I trade during the day, or the MES micro contracts, the MES, which are the new micro contracts. And I think that's great for new traders because, first of all, I really specialize on beginner traders that don't have big accounts. And, if you don't have a big account or have, say, over 25,000, you're kind of stuck in a pattern day trading rule. And that it's already, the odds are already against you. And that's kind of hard. So a lot of people that start off trading, they start off. I know a lot of them. I know people in my town. They're always talking about how much money do you have. I said, how much you want to start off with? A couple of $1,000s. I was like, oh, well, don't are you planning to? One thinks they're going to get rich, starting with a couple $1,000s. I want to show people how they can make some money, using a smaller account. So this is the micro contract. And I have a set of stochastics underneath us. And these are the momentum indicators. This is really cool. The momentum indicator, and I don't know if we talked about this the last time, because this is my bread and butter. This is as close as the Holy Grail I always say that you're going to get to. If you could, look at this and make something out of this. But each one of these bands, I call them, are a stochastic oscillator. And not to go into too much detail on that, they were developed in the 1950s by a guy named George Lane, and it's a momentum indicator, and it's a fantastic indicator that measures the internal movement of these candles, and you can't even see it over the period time frame. So we'll take this for example. Normally, stochastics have two lines. They have a percentage K line and a percentage D line. That's just how the formula is set up. The percentage D line is a moving average that's placed on the K line, and the K line is how many periods you're taking back to take your data from. So in this case, we always start with the default, which is 9 periods back with a 3 moving average on. And not to get too detailed with that, and you have the K and D line. So I get rid of the K line, so you're only seeing the signal line because I don't care about the crossovers. Crossovers and stochastics are too volatile and stuff. I'm just looking for this daily line. And what this is telling us, stochastic momentum is telling us, is the momentum is changing. Now, this is let me pull something out of it. I just happen to have something here for us. If I can find it here. There it is. George Lane, he said the best way to kind of describe so the best way we could talk about momentum is the thrust of a rocket. If you ever did bottle rockets or model rocketry, you put that engine in the back and you shoot it up, and it runs out of rocket powder and stuff, and it stops, but the rocket continues to move up. So that's because and you could chart that. You could chart the power of the rocket blast, and it just dies. That'll just die. It's dead. No more oxygen. It turns off. But the rocket continues to move higher. And that's the concept between, with the stochastics. And when we start to see the stochastics start to rotate back up, you could find what's called a divergence between the price and the momentum. And here's a great example right here. And it works 90% of the time. I mean, I'm not even kidding, but there's a key to taking these, and they're based on the multiple time frames here. Like this is a 9-3, this is a 14-3, this is a 44, and this is 60-10. And these were developed over my last 10, 15 years of just back testing and doing studies on this. And and aligning these up for different time frames. And there's reasons behind it, which we don't even have close enough time to go over that tonight. But anytime you want to discuss it more, I'd love to talk about it. The price is going in one direction. We have selling in the price, and it's going down and it's going down. And we're watching a series of, in this case, we're watching kind of a series of lower lows. You have a low here, a low. You can tell the trend is down. It's heading down here. There's a little low here. There's a low here. Um, there's a low here. And then you had this lower candle right there. Actually, where am I looking at here? Oh, here. So we had this low and low. So right here, you had a low, and then you had this lower low. And at that point, you had a higher low in the stochastics. What that's telling us is the momentum has shifted internally, and we can't really see it on the candles yet because slowly the internal candles at the 9 periods, it's going up and down. This is actually a gauge from 0 to 100. 0 to 100 is the range, or if you had a stock range, the bottom would be 0, the top of that range would be 100. So this is measuring each close and where it is in that range. And when we start to turn back up, that means the momentum is shifting, even though the price is going lower. And that gives us what we call a preactive indicator, not a reactive indicator. It's telling us something's going to happen, even though the price is lower, which is great. You want to always buy that divergence. It's an easy thing to tell. You have a reversal candle, you have a higher low than the previous low on the stochastics, and that's your divergence. And from that point on, 9 times out of 10, it gets an explosive move. Now, this is each time frame, and again, like I said, I could talk about this all the time because it's my, it's a method that every part of this is mapped out. So a move like this, when the divergence is, you're looking at taking the trade 5 to 7 candles, because 5 to 7 candles is the average length that we go from oversold to overbought, and that's just a safety mark. And that's why I'm saying that everything needs to be done like you're a friggin' robot. You don't want to put any mental thought into this. You want to get your money and get out because there's no guarantee it's going to go higher. You're smoking hopium when you take trades. You're hoping that's going to get to a certain level. Here, you're basically doing a scientific, you're telling, I already know momentum's changing. I'm getting a reversal candle. I'm taking my entry. My stop automatically goes there. I'm getting out when we get above 80. Case closed. No emotion, nothing. Hey, I left some on the board. It goes higher. That's okay. Because I know each and every time I get that setup, here's another one right here. I'm going to get that move in that direction. So that's so important. And how do you determine these? You have to just know, again, learn the method and then apply the method, but apply it with exact discipline. Don't stray from it. Don't try to make up things. If it doesn't work, you get out. Well, let your stop take you out. You have those on the sell side too. Here you have that high and then pull back down, and then you get a higher high, but the stochastics rotated down as you're making that higher high. And that's what you're looking for. Higher high, lower high. That's the divergence. And that tells you right after, once you start to see that first candle and that turns over way before relative, we should be higher than this. If we were up here on the momentum and the market, it's kind of rolled over and we started to come back up, shouldn't we be back up to that same level where the price was back before? But we're not. That means internally, those candles are starting to roll over. Even though we're getting that bounce, I could tell here because it's reading the internal percentage of where it is on that candle, average over the last 9 periods, and it's starting to dip over. And a lot of people don't understand that concept at all. It's a very hard concept unless someone really spells it out for you and shows you, like, it's very hard to comprehend unless you really understand it and just start to see it in action. So the one rule is, and with the momentum indicator, it's very easy. Just look at your trades. Do I want to get in a trade? I want to make sure that the momentum is on your side. So if I want to go long, why not have a nice move up here? Why would you go long up here when all of a sudden you're overbought? Simple test, a litmus test. You're about to take a trade. Let me check my stochastics. The momentum in my direction, or is it against me? Because if it's against you, why, you could see the market goes up, it goes down. This is the way it goes. It's better to be in buying something on weakness and selling things on strength. And that's another thing that, beginner traders are thinking, well, here's a lot of strength. I want to jump in on it because I'm missing it. But you should be, taking those, market, just understand how markets move, ranges, trend lines, buy into weakness, sell into strength.
How would you adapt when you have like a big like a big bull run or bear run, like a big trend market, like we had, let's say, on the S&P, or we had on USD yen? Would you still trade the same setup, or would it be a different thing in that case?
That's a great question. And the reason it's a good question is because that is the area that experience comes in. You could teach someone a method, but yet also teach them when to use that method. There are certain times that any situation, if you have a trade on and stuff and news comes out and the market goes against you, I don't care if it's overbought, oversold, or the market's going to go where it's going to go, and news is going to take control of it. And that could happen on a couple different things. And I call them bad beats, just like you're playing poker and you have a good hand, but you get whatever. It's a bad beat. You will get those. I've been in a situation where there was a perfect divergence right on the trend line, like this is perfect. And then all of a sudden you get a volume spike down. And then I'll see coming across on one of my alerts algorithm or a sell program hit. And it was just happened to be a sell program hit at the same time with on the trend line because they knew where to place the trend line, maybe to hit some orders and they were going to drop it. And it dropped and it came right back up. But the fact is, it was like there was other forces in the market at that point that were beyond my, I couldn't deal with that. So there will be times when the market is going against you and you got to realize that. You got to say, hey, this market, people are panicking. I'm not going to try to take any long side divergences and buy, realize what the trend is for the day. If it's a strong trend down, I would take the short side divergences. When the market pops and it gives you a short side divergence, trade to the downside, cuts half your losses in half. It will. It would just, if you do all this stuff, you might not be trading a lot. First of all, you're not going against the market. Wait for these setups, but your percentage of trades, and then if you have a good angle, and I want to show you one more thing. I have what's called a candlestick counter here, and a reversal candle is anything that has a tail that is twice as long as the body. All right, so here's a body, here's a long tail. That's kind of a reversal candle. Um, so the tail has to be as twice as long. And I'm looking for that or a piercing. There's only 4 candles I'm looking for. I'm looking for a hammer or a shooting star, which are just the opposites, a piercing pattern, um, bullish piercing or bearish, I think it's called a dark cloud cover. And then an outside day or an engulfing pattern. These are the real good reversal candles. And if they show up with a divergence, I tend to take a bigger position. And I think that's key too, is understanding, when the time to really fold them and when to bet them. Let me get back to that. So I made this little chart for myself, and depended on if I had the reversal candle, the trend line is on, and the time of day is important, and the VWAPs and the 5-minute stochastics. If all these things line up, I call them, there are 2-star and 3-star divergences. If they're all lined up, I want to take a big position because those positions really, that's where you're going to make your money. You could be, hanging out the whole day and not really trading much, but then you had a good setup. You got to take it. That's going to be your money making trade, and it's going to be a high percentage trade too. If these things just all line up, and it's like I said, it's just you have to whatever whatever setup you like to use. What the characteristics are, what the criteria is. For my criteria, I'm looking for, this was again the charts that I use during the day when I'm broadcasting the market. So I'm actually kind of going through these divergences. I'm outlining them. It was a beautiful one this morning, or actually these go across overnight too. Actually, we can see if there's a divergence right now and trade it if there was one.
Yeah, in the Asian session, maybe a little bit slower, but
Yeah, but that's something that the simplest things in the world in trading, the logical things, momentum being on your side. This is a 60-10 on the bottom, represents a 5-minute time frame, and if you have that going in your favor, the moves are so much bigger. And just the combination of knowing what to look for and just waiting for that is it. The hard part is, like I said, our being able to act on it, being patient enough to let it happen, being in front of the computer, and understanding that there's no perfect system. I mean, there's going to be times when things are going to be choppy, but you got to take those. You got to actually force yourself to take the trades. That's why you're in the game. That's why you're there. You got to take the best opportunities.
yeah, that makes a lot of sense. For me, with my setup, when it's trending a lot, I don't trade that much because I'll basically wait for like the extreme of the Bollinger Band. So if it's gonna kind of pull back to the top of the Bollinger Band, it means that the trend is not that strong, or it's gonna reverse. So, but in your case, you could definitely trade this more in a trending market by just looking at setups in the right direction. That makes a lot of sense.
There's always something to learn in the markets.
Yeah, of course, of course. And like you said, you gotta learn these small things, small details that make your setup more reliable, less reliable, and kind of learn to deal with that. So definitely a lot you can learn.
Yeah. I wrote down some notes because I was just saying, another thing is I think if the discipline you need is so much discipline that you have to put it to a point where you have to plan out your trade before the trade's happening. So you have to see your trade happening. Like, is that because you're always looking for it, so you know how it sets up. It's like you go in and you know the environment that setup lives in. It might be in a channel, it might be something similar to what we're talking about, or coming to a moving average, or something your Bollinger Bands plus something else. You know, and I'm always looking at that channel, that type of small little channel, and seeing that low compared to the other stochastic lows, which was actually kind of a so that would that's when if I see that, then I understand that I'm gonna probably have to watch that, and if we start to turn up, I wanna be buying into that. I'm gonna see it happen before. I'm gonna have the best entry possible and the best stop possible. So my losses are gonna be minimum if I am focused. If I'm not focused and I'm chasing, the next thing you know, "Oh, I came out, you know, was getting something in the kitchen and, I missed this divergence, but I wanna chase it." That's not being the best you wanna be. That's not being taken this serious. Taking it serious is this is real money you could be making. You get an opportunity to see a divergence, you need to jump right on that. You come back and you're just like, "Oh, I missed it. Let me jump in. Maybe I'll catch it." It's kind of being like you're playing a video game. It's not a you're not respecting the money enough.
How do you balance that aspect of like staying focused on your charts? Like if you said you just like 8 hours, you're gonna lose focus probably. How do you keep that focus, and how do you kind of balance trading and not missing trades with keeping the focus?
It's very hard for me because I'm doing the show and I'm talking to people and I'm in chats and people are asking me to look at stocks and stuff. So as a trader myself, I don't want to miss these things. I made a bot so I wouldn't miss these. So I have this, what I call the rock bot. And so I programmed all my criteria into the rock bot so it runs. So if I'm doing the show and stuff and we could hear it, you might even hear it, I think we heard it earlier in the interview. It came out, it took a trade. um, it'll tell me that there's a divergence there. I'll look at it, and it doesn't mean I'm going to take it, but I want to look at it and make sure I made it because at one point these things were just so easy to trade, and they still are easy to trade. But the volatility that came into the market recently with all this stuff is a little bit more intense. The moves are much bigger. Where you used to see 2, 3, 4 moves, now you're seeing 10 to 15 point moves in the ES. That's amazing. If you're on the right side, you can make a lot of money on that. So I wanted to take advantage of that. So I wanted to get up in the middle of the night and I said, I don't want to miss a diversion. I want to have my laptop next to me. I'm going to have it alert me if it sets up a divergence. I'm going to get up, I'm going to roll over. I want to look at the computer and see if there's a setup. I'm going to take the trade. That didn't last long. My wife sleeping on the couch.
That's a really good tool. I think that's the way to use algos. People always want to have an algo trade for them, do all the work for them, and like basically they just turn it on and then that's it. But I think if you use algos correctly, then you're able to have them kind of notify you of setups, notify you of certain patterns. Then you can decide yourself. I think that's a really good way to use algos. And I've done that too in the past. That's really good.
I always call it like going to manual. You got the automatic driver on there. It finds your thing. But now once you take the trade, then I take all control back. I said I take all control because sometimes you might feel something's not right. I mean, there is a little experience, and what do you call that? That you gain with experience. You know, knowing if something's not right in the market or feel just uneasy. It's easy enough to step back. You have to come to terms on that if it happened to be a good setup and you step back because you were scared, or where you step back because you really thought there was too much volatility in the market. This is a mental game. It really does come down to being a mental game, even for the best of us.
So let's kind of take it back. And what we tell people who want to be able to master a trading style, like they're not sure what to trade, they have a few strategies they can find online, but they don't know how to, or like which one to pick. How can they start to master things? And like, because it's really about focus, like focusing on one thing and really kind of working on that thing for a while to get results.
Yeah, I realized there was a lot of beginner traders coming in and trading, and I mentioned it before. I mean, you're kind of limited by how much money you have and what the options are. So, I always recommend people to start off with a discount broker. Whatever discount broker you could get, you get better margin. And for an example, like Interactive Brokers, which is not a discount broker, you'll be paying like $3,000 for an ES contract. Where if you get a, broker, and it's not a promote, this is not a advertiser or anything, but if you get most of the discount brokers like Ninja Trader or Apex or some other ones, their margin on an ES contract is $500 and an MES, a micro, is $50. So especially for beginner traders, you want to start off with the penny slots. You really do, and you want to establish greatness in that, because whatever, if you become great trading 1, 2 contracts, and you're able, I always say, apply the method, and you have to apply it. You have to stick to it. This is the hardest part, because most people will miss trades, or they'll won't take all the trades, or something. But you have to apply your habits, even if you start off with a sim count and say put $2,000 in. Apply the methods, take the divergences. There's Everything is pointed out for you, meaning like how many contracts you should take and how many contracts you should take off on your first target, and then as you go up, you increase your position size based off of your, you got to have all that stuff planned out. That's the in depth of having a business plan. Exactly know how many contracts you're going to be taking, what so everyone's going to start off at a different level. But in the beginning, I would start off trading the MES, like the micro contracts, which are open around the clock. I'm not a Forex guy myself, so I mean, you could apply these same rules to Forex. Um, so I have no experience in the Forex trade, but I trade futures, which are basically, the same. We're gonna have the same, charts and stuff we're gonna be trading. And I think we deal with a lot of the divergences. I haven't seen how, like, the Rockbot would do on. I have my Rockbot running on Bitcoin now, and it's just it kills. It really does a good job on Bitcoin, and I take that because Bitcoin is kind of from where the market was back in 1900s, 1900 and whatever, to where Bitcoin just started, just 10 years, 15 years ago. The Bitcoin hasn't been you know, seems to be, manipulated as much. It works good with indicators, I find. I don't know if you find that. You're trading some Bitcoin
Yeah, I
now.
found that too. I find that Bitcoin is easier to day trade. At least for me, Forex is like it can go a little bit anywhere sometimes. Bitcoin is more clear. Like when it moves in one direction, it kind of moves in that direction and it doesn't stop.
Yeah, it seems to be an easier trade, I notice. But yeah, I mean, I stressed, the setup. The question was, I mean, basically, how do we get, these people want to get started? How did they start? What was the exact, what do you think the exact, what I could tell them to help them? What are most traders looking for?
What I hear a lot is people. There's so much information on there, right? You could go on YouTube, you can search for like videos of strategies and things, and there's gonna be like thousands of them for sure. So it's like, which strategy do you pick, and then how do you apply it, and then how do you deal with a strategy not working? Because even if you have like a good strategy online, the first few weeks or months, it could not work well. It could be mistakes you make. It could be just not experience with it. You miss setups. So how do you kind of keep that consistency? How do you kind of show up at the chart every day, stay motivated, and kind of be able to trade something, but also try to find ways to improve?
Yeah, I mean, God, that's a whole lifestyle change, I guess. It's a lifestyle, right? I would think, um, you know, is just being the best at whatever if you're learning, you have a method. If you have a method, I think you got to have some type of method in trading. You could go into the day and just wait to see what applies, but then you'll be chasing things. You don't have for me, I have 3 setups I'm looking for, and it's easier for me to just wait for those setups, plan out my trade. I know what they're going to look like when they're setting up, so I can prepare and I can buy at the best time. I think everyone has to do that with their style, their method. I don't want to ever push my methodology on anybody else because I always feel everyone needs to find their own way. If you could see this and work and it works for you, or you could add it to your toolbox and it helps you in some way and use it with it. I totally think that's great. Um, Personally, I don't think there's anything better than it. So it's hard for me to say, well, how are you going to get good at what you're doing? I said, I don't know if you're ever going to get as good as what you could be doing. If you learn the proper way of trading divergences. I mean, that's really something I would recommend doing. At least keep that in your toolbox. Learn about it.
Yeah, it's a good point. I always tell people they should really come up with their own strategy. Like, there's so many things out there, but you can always find an excuse why it's not working for you. So you come up with your own thing. Maybe sure you find things like from here and there. You find ways to trade, but then you really come up with your own plan, your own way to do things.
Yeah.
And then I think you get more comfortable with this. Then you can find the ins and outs, the small pieces that you need to be able to make it better.
Yeah, I think you refine it. You refine it. There's a refining method, because you could get bad fills. Like you could have a good methodology, but have a bad fill. And that happens a lot because for whatever you could have just bad timing, or maybe you don't have, you're taking market orders instead of limit orders. A lot of people got to be chasing stuff when they see a setup and they feel like they're missing out, especially momentum traders. I would just stick to the game plan. Take your profits. I find the methodology for anything. You gotta treat it as a business. You gotta have everything defined for you. There's too many people doing this thing. Like you said, just everyone out there is teaching something. If you could find something that works, you qualify it. You know it works. If it's working, why stray from it? Why stray from it? Why if it works, it works. Lock it up. Go into your basement. Shut the door. Do it, you know? But the only reason it's not gonna work is because either we got lucky at the first time, and it wasn't meant to work, or you're just, I don't know, it's just there's a missing piece. It's so hard. You have to be perfect. You can have a great system, but even if you're late on your trade or your exits are not fast enough, you could get, you have the slippage. Slippage is, and if you're trading for a couple, I do a thing where I'm trading 1 to 2 contracts in the MES, and the goal of the day or the goal of the time, the concept is here, 1 to 3 MES contracts. They move $5 a point basically. And if we get a divergence, we're looking at a trade that's usually $20 to $40. We want to do 3 of those a day. So, we want to get on average $100 trading, basically $150 in margin in each one of these trades, $50 a contract. And, and just that's not a rush trade. That's not a bad trade to take three of those trades, but you have to wait for them. All right. You can't make up. And if you don't have the 3 trades to trade on the day, and if you could do that and you successfully do that over and over again, then why can't you do it with 10 contracts? Why can't you do it with 50 contracts? That brings in the money, but you got to establish, your method works great. You have to apply it in real time and real money behind it, and see how you do with the real time nervousness, the discipline that comes along with it, the fear, the greed, all these things you have to deal with.
I think a lot of new traders are chasing perfection too. Like they want the perfect strategy, the perfect setup. But perfection or like trying to be close to that comes with time. It doesn't come like on day one.
Yeah, and knowing when to apply your method. That's the other big thing is, having a market that's nice and choppy and you could apply it, what methods you could use at certain times. If you have a very strong trending market, I usually trade flags. I have a real good formula for flags. I wait for the stochastic to rotate fast. The stronger stochastic, the 60, will be embedded above the 80 line here because that represents your 5-minute time frame, and that 5-minute now is rallying. So I keep that 60 is above that. The fast rotation that gives me, and the price is holding above the 20. It's called a 2020 flag. It's the best trending setup, and I just have to wait for it. So it's all about waiting now. It's not about anything else. I mean, for swing trades and stuff, that's a little bit different. You could still apply divergences to longer term positions, and I think that's great. really good for like someone saying, "Oh, I want to try to buy some Apple," and then if you look back at the Apple chart here, I don't even know. Let's look back any chart because Apple's not a great chart to look back at. I don't know when the last divergence was on that. Um, but you could find divergences in a lot of different things or trend lines.
Well, we did cover a lot. I think a lot of advice for people to apply and to think about. A lot of setup, of course, a lot of mindset of, like you mentioned, business stuff to think about. So, where can they find you? They'll connect with you or reach out after the interview.
Oh yeah. Well, of course. You can find me every day at daytradingradio.com. Daytradingradio.com. That's where the broadcast is. And if you'd like, you could go. I got a link here. You can put it down. It's dtr.tv forward slash free, and that's a free trial. So you could just there's no credit card. It's just a link that opens up the whole site for you, so your listeners could try it out and see everything.
Awesome. I'll put that in the show notes for sure. People can check it out there and get try your services. I know you do a lot of good work. You're there every day without fails. That's awesome. Of course, people can learn a lot from this. So really appreciate what you do and all the value you put out there.
I appreciate it. It's great to talk to you again, and stay in touch because I'd like to hear more of your adventures.
Of course. Thank you, John. I really appreciate your time and hope we can catch up soon and discuss trading again in the future.